Hey guys, Zaid here, the mortgage professor, coming at you with a quick video. I want to go over a question that I get all the time, especially now that things are starting to heat up in the market and we're getting busier. I get asked all the time from either clients or realtor partners and new construction folks, "Hey, what the heck's a mortgage broker, and how do you differ from a retail lender or from a bank?" And very, very, very stark differences. And I want to go ahead and get one thing out of the way here. Um, Even though I 100% believe the math will also dictate the same. I believe wholesale is the future. I think it's a much better process than what retail currently has to offer. I'm not making fun of retail lenders. I came from that world prior to being a broker. I have a lot of buddies that are great retail loan officers. So this is not me poking fun at them, but just want to lay out some facts here. So let's get some definitions out of the way. So, what is a retail lender for those of y'all that don't know? Retail lender is or a retail loan officer is someone that works directly for a bank or for a lender. So, um, perfect example would be me. When I was employed by Cardinal Financial, I worked for Cardinal. I could only lend Cardinal's money at whatever my boss wants to set the rates at. So, those are my programs and whatever their underwriting rules are. So, if I had a loan go south or if I had not favorable pricing that specific day for that specific product, that's all I had to offer. So that me being an employee or me being a retail lender, I could only lend my money or the company's money rather by their rules using their systems and their turn times versus me being a broker. Specifically here at Stonegard, we have access to like 100 plus different lenders. There are hundreds of wholesale lenders out there, or hundreds of lenders that will take on wholesale business. But me being a broker now, I can send a loan to whoever the heck I want to. So I have access to, like I was saying earlier, a couple hundred or 100 plus different lenders. Um, and we have much more control over the process. So we are independent. Like we're doing everything in-house. And the only thing that lender is doing that we send the loan to is really just stroking the check to pay off the seller. So those are the main differences. So just to go over a couple more facts here and why you should use a broker over a retail lender. And again, this is 100% fact. This is indisputable. I mean, I have sources I'll actually go over here as well and examples. But the main reason why wholesale is superior in every way to retail is pricing. My pricing as a wholesale lender or as a broker is going to be significantly better than retail. Period. End of story. And when I say better pricing, I'm talking about better pricing through the exact same lender. So if you were to pick up the phone and call Zaid when I was working at Cardinal, and you were to get a hold of a broker that would also price a loan out through Cardinal directly, you're going to get two very different numbers. The wholesale pricing is just like it sounds. It's wholesale, going to be significantly better than what the retail guy, even in-house, has to offer. Um, a couple different reasons for that. Main reason is it's significantly cheaper for these lenders to do a loan through a wholesaler or through a broker than it is to do it in-house. There's no branch manager that has to get paid. There's no regional manager, no VP, no marketer. There's less bureaucracy that loan has to go through when it's done through a broker. Therefore, the pricing gets passed on to the client. Additionally, whenever I price out a loan with a lender as a broker, they know I have access to everyone else's pricing. They know I'm going to send the loan to multiple different places or that I can shop it with multiple different places. So they're typically going to give me their best foot, they're going to give me their best number, they're going to come with their best foot forward just because they know I have the ability to send the loan wherever I want. And then mathematically as well, we're capped as a wholesaler. There are federal laws that limit the amount of margin we can build into a loan. And I think that's the same thing for retail as well, but it's significantly lower. So, when I was working in the retail world for multiple different retail lenders, I mean, if you're making 3% on the back, and not personally, but if the lender is making less than 3% on a loan, a lot of the time they're in the red. I mean, just the amount of times or amount of different people that have to be involved in the process that have to get paid, and the amount of marketing and the employee benefits and all that stuff that, that goes into it. They're losing, they're losing money if they're not able to make 3, 4, 5% on the back end. Versus us as a wholesaler, we're federally capped like at 2.75%. In reality, we're probably baking in about 1 to 1.5% margin on every single loan. So off the get-go, we're baking in half of the margin at worst than the best retail pricing you can get. So pricing for sure, rates, costs 100% better than what any retail lender has to offer. Number two is the legwork. Shopping your mortgage when the prices of houses now, like I just read, where average mortgage in America is 470 plus $1,000. It's a huge investment. You should shop it 100%. So we're able to do a lot of that legwork for you. Different lenders are going to cater to a different client. I'm not going to do a Chase private client loan or a jumbo for a first time home buyer. There's going to be certain lenders that are going to do a much better job at that. Some lenders have great down payment assistance programs. Some lenders have phenomenal, like just normal FHA pricing. Some don't. We're able to do that legwork for that client, and make sure we pair them with the right lender. We want to make sure that the loan that we give them is going to be the best one out there. Um, Products. I mean, that's the third thing. I mean, we're the amount of products we have access to, like I just mentioned, we have dozens, hundreds of lenders that we can do loans with. When I was working, on the retail side, I only had the products that that lender had to offer. If they were just doing FHA, VA, conventional, that's it. I know some guys don't even have USDA products, which is crazy, especially here in Texas, where so much of our houses are eligible for zero down USDA mortgages. A lot of these guys have DPAs, stands for down payment assistance, or they're going to have niche products, bank statement loans, or I-10 loans, or non-QM, stated income. I mean, if I didn't have that, if I worked for, you name it, CMG or any other retail lender, if I didn't have that product, I can't help that client. It's a done deal. If I can't do the loan or with what I have in my toolbox, I can't go get more tools. Versus us being a wholesale lender or a broker, I'm sure I can find someone that will do the loan. And if I currently don't have anyone in our portfolio that does it, I can go find it. As long as it's legal and as long as it exists anywhere out there in the world, we can do the loan. Um, Let's see here, just referencing my notes, kind of piggybacking off that, tricky deals are going to be probably in much better hands with a broker than with a retail lender. I mean, if you're a home buyer, or if you're a new construction guy or realtor, and you guys need this deal to go through, you want your trickier deals to go somewhere that we're able to send it to multiple places at once to make sure we get a favorable underwrite or have access to as many tools or as little overlays as possible. I can't tell you the amount of times I've been able to pick up loans that have been declined elsewhere that we've been able to get closed in like 15, 20 days just because that lender didn't have the product. I mean, we can do FHA loans down to a 500 credit score. Same thing with VA. We can do a 500 credit score, zero down VA loan. No bank in the world is going to do that. There's just not a bank out there that has that ability to do it. Or a lot of retail lenders won't go below a 580. I Last year we've probably done dozens of new homes below 550. It's nice being able to have that in your back pocket. Now, I don't want to just do 550 loans, but it's just nice knowing that if you have a trickier deal, it's going to be in a position where it's going to have the best shot of getting done. Point number five here is going to be faster closings. It's not a secret with wholesale right now, uh, especially like these big multi-billion-dollar companies like UWM. You know, they're on the bleeding edge of technology, and you can't call UWM and do a loan. You got to do it through me, or any other lender that's or broker rather that's in their network. They're putting billions of dollars into technology every single year. AI is advancing so fast. I'm not saying some of these other lenders don't have that as well. But I mean, just faster closings. When I was working at Cardinal, we would have to do every single one of our loans, refis, which I think are easier than purchases. We'd have to lock for 45 or 60 days. Even the most well-qualified 700 borrower was not getting done in less than 30 days. Versus us wholesale wise, we're able to get the loan done probably in less than 2 weeks a lot of the time. I think our current average is about 11 business days, if I'm not mistaken. Um, Everyone wants faster closings. The clients want faster closings, home buyers, home sellers, everyone involved in the process wants this loan to close as fast as possible. You owe it to yourself and you owe it to your client. And that just to go over some numbers here for you, just to kind of solidify what I'm saying here. And again, not to disparage anyone that's in the retail lending world, but here's some numbers for you. So right now, the amount of loan officers in the country is at 93,000 from 400, over 400, almost half a million just a couple years ago. A lot of these big retail lenders are either cutting staff or not recruiting. They're not going after the the retail guy anymore. They're not growing in those sectors. Versus you look at wholesale is now 27% of the marketplace. So more, which by the way is almost double what it was over the last few years. So more and more loans are starting to go to wholesale. And it's not like, yes, the market sucks. Like, let's not sugarcoat it. And um, but we have data that's showing things getting better. I mean, let's look at just mortgage volume. In 2023, mortgage volume was at 1.5 trillion. 2023 was a not great year, but in 2024, we lost about 100,000 retail loan officers, and we did about 1.7 trillion dollars in mortgages. Let's look at 2025. This is the year right now we have 93,000 loan officers in the country. So we're down again 75%. We're going to do $2.1 trillion dollars of mortgages projected by the Mortgage Bankers Association in 2025. 2.1 trillion. That's about half a trillion dollars more in loans. That's a lot. Next year in 2026, we're expected to do 2.3 trillion. Volume's going up. I mean, 2026 is probably going to be one of the best years we've had for mortgages from a volume standpoint that we've seen since 2021. Yet, all of these lenders that you would typically see gearing up and hiring a whole bunch of retail loan officers to take on additional volume just aren't. I mean, they're not. Rather, they're investing heavily in expanding their wholesale divisions. What does that tell you? I mean, they know it themselves. I mean, we see it all the time. Uh, UWM, these wholesale only lenders are hiring like crazy versus some of these other bigger guys laying off thousands of people or just not recruiting outright. Or gearing up for their wholesale divisions and expanding them. It's just, I mean, the numbers are there. It's unfortunate. It sucks to see. That said, we are hiring. So if you are a loan officer and you want to take advantage of having better pricing, come on over. But um, we're seeing more and more lenders, bigger names that you always associate with being retail, like Rocket Mortgage, for example, or CMG, all these guys that typically do trillions and billions and just massive, have huge call centers or retail brick and mortar divisions. I mean, they're gearing up for wholesale. I mean, I think you look at Rocket Mortgage, they almost did more, they did just as much wholesale last year than they did retail, which is insane. I mean, it's crazy. Um, it's a good thing for the wholesale world, but I mean, we those of y'all that are not using a wholesale lender are really missing out. I mean, if you're a client, it's costing you money. If you're a realtor or home builder, it's costing your client money. And as fiduciaries, myself included, we have a duty to put our people in the best possible financial position. And again, this is not a dig at the retail guys at all. I know a lot of really, really good retail lenders, but I mean, it's proof's in the pudding. Like I was saying earlier, you're going to have better rates, better service, faster turn times, better technology, and the ability to shop dozens of lenders at a click of a button to make sure you're getting the best possible loan for yourself or for your client. So that's the main differences, guys. Wholesale is the future, and we're going to start seeing it more and more in the coming years. Like I'm reading articles left and right on this lender, that lender, whoever it might be, growing their wholesale or opening up a wholesale branch. And I'm only reading how tough it is for retail guys right now, or how, these same, lender X or lender B cutting 1,000 loan officers, or not hiring, or whatever it might be. Um, it's a very interesting market out there at the moment. I feel like we're in a transitional period for sure. Just be ready. I mean, that's the main thing. So I don't think whole retail is going to be around in the next 10 years, or really past 5 years. Once wholesale starts to pick up a little bit more, it's always good to be an early adopter. If you're selling in the industry doing a lot of volume, it's really beneficial to be an early adopter of the new up and coming thing. So as always, guys, if you have any questions, please feel free to reach out to me directly. Most of you have my email and phone number. I'll also leave it in the description for those of y'all that are watching this on YouTube. And again, just to be perfectly clear, I know I've said it, I don't want to beat a dead horse. I'm not hating on retail. I came from that world, did it for almost a decade. Really good people in the retail lending world, but time marches on, and if I didn't believe this was the future, I wouldn't invest and start my own brokerage, and leave behind a great job working in retail and a pipeline and the support that I had. I wouldn't do it. But I believe that this is the future, and the numbers, volume wise and percentages, all seem to agree. So thank you so much. If you made it to the end of the video, I appreciate y'all, and I'll catch you on the next one. Thank you so much. Have a good one now.